Today, we're joined by Rebecca McLean, Executive Director of the National Real Estate Investors Association. That's an organization that's connected to hundreds of local REIA chapters and thousands of investors across the country. I'm Kathy Fetke, and welcome to the RealWealth Show.
You're listening to the RealWealth Show with Kathy Fetke, the real estate investor's resource.
Rebecca, welcome to the RealWealth Show.
Thank you so much for having me.
Let's just start with what you do. Well, what is the National REIA and what do you do there?
We're a nonprofit trade association. We've been around over 40 years at this point, and we support real estate investors, generally independent real estate investors, and that can cover everything. So all the things you can think of is strategies and niches that investment covers, then we cover that as well. And my position is executive director.
And RealWealth was a member for years, and I've gone to your conferences. They're really, really beneficial and full of support for National REIA members and real estate investors in general. So you recently had a leadership meeting. Tell me a little bit about how that went, given this is probably a unique situation that lots of your members haven't experienced yet in terms of the economy.
Well, yes and no. You've got to understand that many of our members are a little older and have seen just about all there is to see. So, there's that segment. But, there was a lot of discussion about younger members, how to reach those that need some information and education because they're getting not necessarily great information through TikTok and other ways that they're being influenced. And we were talking about how that is potentially going to cause some major changes in law because of the bad information that's out there. So we're seeing wholesale laws change all over the place because of the really poor information that's being promoted on the internet specifically. So that's
tell me more about that. Yeah, I mean, I know I just have to dive into that. What kind of false information are people getting on TikTok regarding wholesaling?
How it's done and the legalities of doing it have been a real challenge for us because, the whole no money down is a great idea, but there are specific things that are around that have to work. And with wholesaling, people don't understand that it's the contract. We're talking about a contract. And to execute that contract, there has to be an actual intent. If you're purchasing a property, there has to be an actual intent to take possession and close. Well, most of the time that's not actually happening. And then the dollar amount that's following
I would say 100% of the time.
The dollar amount that's following that is a problem because they're not actually, willing to take possession of that. So there's a lot of misconception about what wholesaling means and how it should be executed. And so we are trying to do a lot about that. We've been on this quest for years. We had a meeting specifically with the Ohio Department of Real Estate to talk about, and we interviewed them. So we have a great video as a resource for that about why they are concerned about, some of the things that are happening and how people can stay out of trouble. And so we're doing a lot and providing a lot of resources there because it's getting more and more challenging as that information is coming across via the internet and not necessarily inside the REIA community where people can point them correctly and there's an attorney that can give some advice and, support around.
Wait.
That.
So you're saying that we shouldn't take advice from the TikTok star, that we should talk to a legal expert? That's crazy.
It's crazy.
Amazing. Yeah. So I think when I was a member of the National REIA, there wasn't TikTok. So this was not an issue at the time. That's fascinating. So just people out there giving bad legal advice. Be careful. And let's just kind of go back to basics here for those who don't know what wholesaling is, because a lot of our listeners are buy and hold investors. So what exactly is wholesaling and how does it differ from what a real estate agent does?
So the idea, here's what you hear about wholesaling is that someone goes out, finds a property, puts it under contract, and then resells or flips that contract. Yes and no. Yes and no. So, the finding of the property is true. What should happen is when they have a contract, they actually will execute on said contract and then turn around and resell that. That is, it can be on a double close. It can be all of those things that are creative, but you have to take care of the end consumer, right? So the person that you are purchasing from has to be treated with respect and under the terms of the law. If you are trying to just find the property and resell it, you're acting as an agent. You're doing so without a license, and that is illegal in every state. So, each state now is putting parameters around what wholesaling can be, how many you can do, what the process is. So you're seeing state after state start enacting, laws in addition to what they've outlined. And generally that's outlined within how they regulate real estate agents. That's where the law generally falls, but they're now taking it out, making it a piece of its own law so that they can better regulate and put parameters around that.
Are you surprised? I mean, personally, I'm not. I'm surprised at how long it's taken to actually regulate this.
I agree.
Yeah, what are your thoughts? Yeah,
I agree, because there has been misinformation for years about how to do this and the people that are doing it. I think because it's now such in the public awareness, because it's all over the internet, I think that's what finally has triggered, the no more, we can't have this any longer. And then you've got agents that are struggling now. And that's, I think you had Rick Chardon yesterday talking about how agents are struggling. And so anything that's cutting into their business is going to be a problem. And so you're seeing an outcry from them, about this more than used to be a challenge as well.
yeah. I always NAR, National Association of Realtors, is such a powerful organization, or at least it used to be, with lobbying and pushing the agenda forward for licensed real estate agents. I was always shocked that they didn't go after this years ago, or maybe they tried.
Well, I think that it didn't cut into their business as much. There weren't, such tight markets. It wasn't happening in ways that it was so blatantly in their face. And remember, you've had this whole discussion around NAR. God bless them for the PR they got, during the last 2 years, and all of the talk about agents and the percentages. And so they've already got a little bit of backlash against agents that they never had before. And so I think people are now more willing to participate in terms of the seller, more willing to participate with the wholesaler than they necessarily were before, because they've had all of this negative PR. And so, this is time. They've had to put down their foot.
So final question on wholesaling. You're saying all states are changing their laws, or are there certain ones who already have?
Not every state. There are several who already have, and I know many more are now getting in line to follow. We spend a significant amount of our time legislatively trying to track and lobby in those states. Probably not going to get them to not pass a wholesaling bill, but at least trying to make it palatable that allow us to still work within what should have been the legal options and what people should have been doing in the first place.
Yeah. So wholesalers out there, beware. Laws are changing. You need to know what they are. And it's better to get in front of it, right? And be a part of the creation of it rather than just, find out later. That kind of happened to us when Rich was one of the first personal coaches out there 20 years ago. And, the question was, is it therapy? How is it different? Therapists have to get all these licenses. Coaches need nothing. And so as therapists started to get upset that coaches were in some cases charging more than they were getting after years and years and years of education, this became an issue. And Rich was part of the creation of the International Coach Federation to get in front of that, to help and be a part of the regulation. So wholesalers out there, be a member of the National REIA, get involved, because this is a large organization that's going to have more clout and power than just the individual.
And we always say, if you're not if you're not at the table, you're on the table. And that is very
That's
true.
a good one. I like that. Okay. What else came up in the leadership meeting? Any other issues people are facing?
Well, and one of the other things that we're seeing is kind of on the topic that we were going to discuss today about what investors are facing and are there people sitting on the sidelines and what that looks like. Our groups have always, and being around for over 40 years, we've sort of seen it all. And many of our members have been members through all of that time. But what our groups do, I think, really, really well is that we serve the needs of the market. And so often when news media is touting the benefits of real estate investing and how fabulous it is and how it's, a great strategy for wealth growth, then we see lots and lots of what I call seekers at our meeting. So they're trying to figure out, will it work for them? Some of them, unfortunately, are there because they think it's a get rich quick potential, but we have many new members and kind of looking to be investors at the meeting. And so what we have to provide and support and strategies at that point is different than when the market contracts. The world isn't looking to invest in real estate. And what we're left with is our more mature investors that actually are investing. They're actively pursuing their business, and what they need and what we have to provide in resources and support are a little different. And we're starting to see that turn for sure. Started probably, last year. But seeing it very much in this year in terms of what our members are asking for, what their needs are, and then how we're having to gear up to support that. So I think the idea that everybody's hopping on the train to invest has changed. And our concern, kind of back to where we started, was that those that are looking kind of to get in, that are looking for something that's easy, that's not, kind of, I'm going to put my money in and use AI and do all these things and it's going to be perfect. Those people are going elsewhere for that information. We had a group leader that laughed and said, yes, it's hard when, some of the newer members and, finally understand that they can't rehab by text. So
they can try.
Yeah. But it becomes a little different world for us in terms of the support that we give. They're looking now, just to give you an idea, some of the most attended meetings now are trade shows where they're looking to connect with service providers, with those who can offer support. And the most visited booths at those trade shows are actually skilled professions, contractors, plumbers, electricians, all those things, and CPAs and attorneys. And so that means that you're really looking at people that are more mature in their business and looking for help in those areas.
Yeah, that's really fascinating that this is a time of contraction. Yeah, so you've got people looking for the easy win, leaving the market, and that is better for more experienced investors. So if you're not experienced, then you want to line up with someone who is, partner with someone who is, and learn the ropes, because there would be less competition from those who don't really know what they're doing. Would that sum it up?
Absolutely. And the other side to that is those who are staying are looking at partnering, co-investing, fractional investing, and being able to invest a little more passively. So those newer members that are coming and seeking are finding those to be better options than trying to go out and be a true rehabber and or be a rental owner, which takes work.
So how are investors that are in your network and who are members, how are they navigating the higher interest rates, higher insurance costs, just the higher material costs, everything that's sort of on the table right now?
Well, again, it kind of depends on their level of investing. I've got people that have been in the business so long that they remember double-digit inflation, double-digit interest rates. So to them, this is no big deal. All of it is able to be navigated. Anybody, though, and this is the majority of our people that have come into the market since 2008, have had a little different experience. It's always been, and real estate has gone up. Everything has been kind of roses and sunshine after the 2008-9 crash. And so it's a little tougher for them because they haven't had to dig in and deal with the crisis of that time and or some of the challenges before that. So I think even more than interest rates, though, is starting to be the insurance, the ability to get it, the ability to afford it. Those are all huge challenges. And on the rental side, the property tax is just out of control in many, many areas, which oddly enough, tax lien and deeds was a niche that nobody talked about for years because it just, was such a small area. That's starting to be a requested topic now because people are having such a hard time keeping up in some cases with their property taxes. I know here locally, my taxes on our rental real estate went up 32% in some areas and 50% in others. And that's can be overwhelming if you haven't planned for it.
In what amount of time?
1
in
year?
A year? Oh, 30 to 50. How is that even possible?
They do a reevaluation, and because they went, every state is different in how they can evaluate the real estate and then set the taxes. And in our state, they can take over the 3-year period, of which some of that was pandemic numbers, and those numbers were out of control. And so the rise in what the value of the property was so much that that's what you saw then reflected in the taxes.
See, there's people complain about California, but we do have a really great tax structure, in my opinion. And I remember when I was very, very young, my dad fought for this for that very reason. In California, prices would go up so quickly. And all of a sudden, retirees, people on fixed incomes would see their property taxes go up 50%. So they passed Prop 13. There's a lot of hate for Prop 13. But on the positive side, if you're a homeowner, or you own investment property, you don't get those kind of surprises. It just goes up a tiny bit every year. Doesn't matter what the value of the property is. I wonder, do you happen to know if more states are looking at a Prop 13 kind of structure?
I have no idea. And the residents probably are. The states probably aren't because they could capitalize on this. And remember, you've got, some of the pullback on CDBG funding from the federal level. And so states are really looking at anywhere they can get funds. They're looking to do that. Now, a lot of property tax goes into education and things like that. So, you have to be careful about how you're speaking about that. But, we fight a lot at the National REIA level. We fight a lot with our local and state affiliates to try to help with some of those issues. But property tax is one of the tougher ones to actually fight. What we do a lot of, though, and some of our groups do very well. Toledo is one of the best at it. They actually have the auditors division come in, and they will help you go through and fight your increase. So they'll teach you how to do that, how to assemble your packets, how to go through the hearings and fight that. And I think that's one of the more valuable services we can offer because of what a challenge it is.
Yeah. Wow. We do have, as you know, we work with a lot of property managers around the country, and they do help our members at RealWealth, fight those property tax increases because it will really blindside you. I just did a show on it, actually. Interesting times. Okay, so some of the opportunities that the more experienced investors within your membership are doing are looking into the tax liens again. What else?
Well, rehabs and rentals are always going to be some of the more popular strategies, especially because people have done them so long and have now kind of found their way through some of the challenges. But it is very much regional and local. There are areas where the legislation and the economic environment have made rentals that were so hot for so long a challenge. And then you've got the Midwest, where everybody but Illinois is probably still doing very, very well in terms of their rentals, both in the increases that we're getting in rents and mostly favorable legislation. But the coasts, I think, are having some challenges with that. Rehabs, it's inventory. Inventory is the big challenge. And then we've got, some regulations that are challenges there. But those two being still the main. But again, looking into interesting things like midterm rentals in some areas are still very popular. Mobile home investing is coming back because affordable housing is becoming such a challenge. And so you do have some areas relaxing their requirements on that. And it can be very profitable as well as a terrific affordable housing opportunity. And, private lending, of course, for those who have done well and have put away cash, then being able to act as a private lender for others is something that a lot of our more successful members are doing.
Oh boy, you better know what you're doing though before you do that. Before you hand over a check to
Yes.
somebody, there are ways to do it properly. I want to caution people that it always sounds simple, but if you lend to the wrong people, think about what happens to the banks when they lend to people who can't pay them back. It's the same thing. So you've got to really know what you're doing.
Well, due diligence is incredibly important, and it as in everything that we do, I feel like so many people come to us with hopes and dreams, and they think it's going to be easy and it's not going to be a challenge, and they take it on almost as a hobby. And one of the first things we tell people is, no, guys, it's all a business. It is a business, and you have to run it like a business, or you're going to have some challenges. So background checks, credit checks, all of the things that sound, very complicated. Well, you're lending money, you're handing over money. Those are things that you have to do.
Yeah, absolutely. I mean, we just literally this morning found out someone we were thinking about working with lied to us. It's so easy to do a Google search today. Why would you lie about something when you can go just look it up online? So anyway, yes, there's lots of information online to really get to know who you're working with before you draft up any kind of contract or give any money. Okay, Rebecca, any last comments for our listeners, maybe newer investors who are thinking, I can't find anything that cash flows and can't find any deals and I'm out. What would you say to them?
Well, I think there's multiple opportunities. One, getting into a group, learning locally what the strategies are that are working, because it really is different all around the country on what's working in that market in terms of being able to make a profit and being able to succeed in investing. So, knowing the strategy that's working in your market, you can find that at your local group through conversation. So, I think that's one thing. Finding partners. What can you bring to the table that you could help someone who may have more cash than you and more experience than you? How could you work together to invest? Fractional investing and co-ownership are all things that are out there. Again, please screen the companies that you are working with, understand their reputation and their success rates, all of those things. And you can get that feedback also from people in the group and how they've invested in the services and or people that they've invested with. So those are all strategies. And, starting slow in working to one unit at a time on the rental side. You don't have to go in and buy the 20 unit multifamily to get started. And I know a lot of people come in with that ambition, and it's a great ambition, but you can do one at a time and do relatively well. And there are still markets where houses are affordable and rents are still relatively high, and where you can make a good profit. We're still buying. We just, as friends and family and us, we've all participated in deals in the last 6 months or so that are doing well. So it's available, but it may not be quite as simple as it has been made to sound.
Absolutely. I mean, we know in 2000, I think it was the mid 2000s when I first came across you guys and was so thrilled to be in a room with such experienced investors when there weren't really the podcasts and resources that people have today. But back then you didn't have the resources. You kind of were the only game in town. Now there's too many, like you said, and you don't know which ones to trust. So that is, again, one of the things I love about you guys. You really are tried and true, and you've got a great group of experienced investors. Get into your local REIA and learn from others. All right, Rebecca, thank you so much for joining me here on the Real Wealth
Thank you.
Show. It's great to see you again. And thank you for joining me on the Real Wealth Show. If you want more information on how to do investing right, just go to realwealthshow.com.
Views and opinions expressed in this podcast are provided for informational purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to realwealthshow.com.